Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, best-selling author and fiduciary, Tony Walker.
Welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, financial expert, retirement planning specialist, 401k rollover specialist, and fiduciary, Tony Walker. And we've got a really interesting show today. Totally different format, actually totally different set in our studios in Louisville, Kentucky. I'm really excited about today's show and actually next week's show. We have expanded our studio here and our set and actually mic'd everybody up, so we're going to have a great show for you. Some of the most popular Tony in the Trenches questions that we've ever had. And but before I get started with those Tony in the Trenches, let me introduce, first of all, my favorite son-in-law sitting over in the new desk.
It's cool. I like this setup.
Mr. Trey Juergens, fellow fiduciary and compliance officer, Chief Compliance Officer. So you like it?
I do. Thanks for having me.
And I know you tried to move the Tony Walker bobblehead. Don't do that again. That's trying to make it look like Dan Patrick or something.
I like my trinkets here.
Well, you're doing a fine job over there, young man. And also in the studio, we have America's favorite financial sidekick, Mr. Aaron Orander.
Hey, sir. Good to see you.
Good to see you.
Hey, everybody. Hey, everybody.
And then also in the studio at our graphics is Mr. Derek Hudson. Derek, we've got you mic'd up. How was your drive in today?
It was a nice drive in.
Well, it was funny. We're filming this show on April 21st, 2021. You're saying, what are you talking about snow? In Louisville, I don't know what happened in Bowling Green. We had 2 inches of snow here last night. So, yeah. So what we're going to do, folks, you know, over the years, I've been doing this 36 years now. I've been on TV for almost 25 years, and we have, over the years, so many questions, but we've noticed that there tends to be a commonality. In other words, it's not the same exact questions, but we get many of the same questions over and over. And what we did recently with our marketing team is just sit down and we said, okay, what are the 10 or 12 most important questions on the minds of people right now? And we're going to dive right into those. You may have heard of these. They're called the Tony in the Trenches questions. And so, Trey, I know you've put these in order, and we appreciate your work on that. So let's start with the first Tony in the Trenches question, please.
Sure. So, of course, these come from real emails, real phone calls. The first one, this is something we just keep getting right now, especially. Tony, I'm pretty thrilled with what my 401k has done over this past year in the stock market. But with our national debt through the roof, I'm concerned that I'll be taxed to death on this money. Do you have any strategies for minimizing this tax hit?
So if you brought all of our clients and prospective clients into a big, mass hall and said, show of hands, how many people think taxes will go up in the future? What percentage of people would you say would probably raise their hands and say they're going up?
I'd say almost everybody would raise their hand.
Right. So folks, let me go over to the monitor here, and if we can, Derek, let's go to the first slide. First of all, what you have to understand, folks, taxes currently for most people, most of the clients we work with, are at some of the lowest rates I've seen in many years. In fact, if you go back to 1913, at the creation of the federal tax code, remember back in 1913, if you read the history books on this was supposed to be a temporary tax just to give the government a little money to help fund World War I back in 1914, and it was less than 10%. But watch what happened. Immediately, taxes just in a few years went up to almost 80%. Following the war, they went back down, but guess what? They went right back up. Oh, Trey, I don't know if you remember, I did a show once, and Ronald Reagan we talked about Ronald Reagan. Back in that period of time, back here in, I think it was the 50s, 60s, he only did 2 movies a year. Why do you think he did only 2 movies?
He didn't want to make too much money.
That's right, because they were taxing it to death, as much as 90%. Now we come down here, although the average bracket can be as high as about 37%, folks, most of you are in about a 15% federal tax bracket. So if we agree with Trey and his analogy that if we put everybody in a big room and asked them to raise their hand if they thought taxes would go up in the future, I would have to agree with them and say absolutely. Now, one reason they're going to probably go up is something called our national debt. Derek, by the way, Derek, when did you produce this little graphic?
It was only a few months ago.
So it's rising, showing it going up to 28 trillion. Trey, did you check recently? What is it up to now?
It's well over 30.
Okay, and if they pass this, I think they're looking at another stimulus geared towards infrastructure or something. Folks, I mean, we're already at $30 trillion in debt. The only way, there is only one way the government could even possibly get that money back, and that is through taxes. And therein lies the problem if you're sitting there with a big fat jumbo pension or 401k that's yet to be taxed, or an IRA. Remember, folks, the money has not been taxed. Now, what I call that is lack of trust. So if we have all of these taxes out there and we look at the history of the taxes and we see what's going on, look at this. People are getting more and more nervous or less trusting of what the government's going to do in the future. So think about this. We're hoping they don't raise taxes. We realize there's 30 trillion plus in deficits and spending and all this stuff's going on, but look at what the consumer is out there saying, I don't trust the government. So the problem is we got all these taxes, they got to be paid back, and you've got something, a condition we call the tax tumor. The tax tumor that's buried inside your 401k has got to be dealt with. It's got to be eventually paid, and if you don't pay it and eventually die, the tumor gets passed off to your kids and grandkids. So let's take a look at what this tumor might look like. You could be sitting here right now, and let's say you've got $200,000 in a 401k plan, IRA, it doesn't matter. The red would represent the taxes owed on that now. In other words, given a bracket of this, could be higher, could be lower, we're just trying to help you understand the ramifications here. If you were to surrender that $200,000 401k or IRA, the government's going to be in line first. They're going to demand $58,000 in taxes. That's a lot of money. So you say, well, I don't want to pay the taxes, Tony. I'll just defer the taxes. So let's say it grows at a nice rate of return. Down the road, you're well into retirement. That puppy's grown to $864,000. You think you're out of the woods? No, the tumor just keeps growing. In fact, in 30 years, if you were to liquidate this, given the same brackets, what if they go higher, folks? Given the same brackets, you now are going to owe the government $250,000 in taxes. So most people don't have a plan to deal with these taxes. At Tony Walker Financial, we are a full-service retirement planning firm, and we know a thing or two about dealing with the tax tumor. So if you have a 401k, IRA, maybe you've got a thrift savings account, or maybe you got a lump sum pension that you're getting ready to roll over to somebody, make sure that that retirement planning firm has the expertise to not only deal with the taxes, but more importantly, to show you how to use and enjoy that money, which leads me to my final point, and that's my best-selling book, Live Well, Die Broke. So in conclusion on this whole tax thing, folks, here's what I've realized in working with thousands and thousands of savers. Many of you are waiting way too long to spend this money. And if we know the money's probably going to be taxed at a higher rate down the road, my question is, why do you not have a game plan now to use and enjoy this money? Let me invite you to go to TonyWalkerFinancial.com right now. Fill out that Let's Get Started, or you can even give us a call at the toll-free number on your screen. We would be happy to show you how you can use and enjoy and protect more of your money rather than leaving it to chance. I'm Tony Walker. We'll be right back with some more Tony in the Trenches. You stay tuned. Good stuff coming your way. Wondering how much money you'll need to retire? Probably a lot less than you think. I'm retirement specialist Tony Walker, and for the past 36 years, I've helped thousands of savers determine when to retire and how much money they'll need in retirement, and I can help you too. To meet in person at no cost or obligation, let me invite you to log on right now to TonyWalkerFinancial.com or call the toll-free number on your screen. We look forward to talking with you soon. And good job on segment 3. Make sure Derek has that one graphic ready.
Okay,
Segment 3. Okay, thank you, Aaron. All right, welcome back to the Worry-Free Retirement. We hope you're enjoying our new format where we're actually, just for the next couple of weeks, we'll get back to our other format soon, but we wanted to cover some of the most important and recurring Tony in the Trenches questions that come our way, and hopefully this is going to be very helpful to you. So we're going to get it back to my favorite son-in-law, Trey, over there. What's Tony in the Trenches questions number 2?
This next one, Tony, the market continues to find all-time highs amidst so much uncertainty. I have an IRA and some stock that I want to pull some winnings off the table. What would you suggest?
Okay, well, first of all, I would say if you can throw up our next graphic, none of this is real. By the way, Derek, can you go back to that graphic of I know that's not a traco there. This is a funny story. You put that graphic together, didn't you, Derek?
No, I think it was Megan.
Oh, did Megan do that? Okay, it's cool. But I got to tell you a funny story real quick before I answer that question. Years ago, I met a gentleman, and he was thinking about retiring. And I said, what do you do for a living? He says, well, I operate those big tracos out there on the interstate. You remember back when I was 65, they were doing all that construction.
Oh, yeah.
I mean, so I probably saw him out there digging around. But anyway, I said, well, how'd you get started in that business? He said, well, when I was about 16, I was working on a construction site, and an old boy was over there fooling around with a bulldozer, and I'd always wanted to drive a bulldozer. So I walk over to him kind of sheepishly and said, hey, could you ever teach me how to drive that thing? And to my surprise, he said, yeah, get up here, I'll show you. So I get up there, sit down, and he's kind of standing beside me, and he goes, well, what's the first thing I do? And the guy looked at him and says, the first thing you do and always do is just be sure to make a lot of racket. I thought that was awesome. Okay, so let's get into the actual question here. So yeah, I get it. I mean, everybody's making a ton of money. If you've had money in the stock market as we record this show on April 21st, 2021, I mean, you got to admit, on paper, listen, on paper, you got a ton of money. But as I always say, is the money really real? Okay, so let's go to our next slide, Derek. Let's talk about this a minute. You've got this 401k plan. You don't even know what kind of risk you've got in the 401k. You have no idea what the taxes are going to be. You have no idea what to figure out in terms of fees. We'll get to that in a minute. And then most of you have no guarantees within the 401k plan. So what are you to do? How are we going to take this 401k plan and consider trying to get it what we call rebalanced? Because in the world of investments, you have something called diversification. What that means is, if you have all these winnings, imagine you're at the casino, right? The chips are piling up. You've got to assume that if you sit at that table long enough, some of those chips are going to magically disappear. So the idea is we want to take some of those winnings off the table. Well, how do you do that? How do you even know how to do that? Well, let's go to what we call, this is a software we use called Riskalyze. And my favorite nephew, Wes Walker, is in charge of this along with fellow fiduciary Heather Hughes. But this is some powerful software. We've just started implementing this with our Charles Schwab accounts. So we had to come up with ways to systematically what we call rebalance those portfolios, and we're in the process of building that out. But let's imagine this was your makeup. Some of you have a 401k. You know, you might have had some money in short-term treasuries, S&P, maybe a Dow dividend type fund. Here's some more treasuries, some investment grade bonds. Well, what happens is we try to analyze your risk score. And more than likely, your risk score has probably changed because now everything's gotten out of balance. You know, this S&P 500 may have supposed to have been only 15% of your portfolio. The Dow component may have only supposed to have been 10. So the job is right now is you want to take some of those winnings off and get it rebalanced. The problem is some of you don't know how to do this or you don't know how to go about it. So we've got a brand new free service we're offering, whether you've got an existing 401k, a former 401k, or if you've already rolled that 401k over into some sort of brokerage account or something, we will offer to look at that account, analyze it with your risk score. This is called the free 10-minute fiduciary phone call. So what I'm going to do, turn it back to Trey real quick as one of our fiduciaries. So Trey, if you can explain how do they go about scheduling a free fiduciary phone call and also a free review of their 401k plan.
Yeah, so on our website, we always have that Let's Get Started button. If you click on that, it'll allow you to fill out your information on a form. Of course, let us know how to contact you, but you can actually live schedule 10 minutes on my schedule, your schedule, Heather, Wes, whoever. All of our fiduciaries are very accessible. We'll look over that 401k. If you want to send us a statement, hide any account numbers, any information you don't want us to see, we just want to make sure that that aligns with your unique risk tolerance. So go to that website, Let's Get Started. You can schedule a 10-minute fiduciary phone call.
That's awesome. And that's the other thing we found out. A lot of our clients are what we call savers. Sometimes the 401k plans and the way maybe those custodians would say they're conservative portfolios, where for our clients, they're very risky. Yeah. So that's the other thing, folks. If you're sitting there and you're a saver and you feel like nobody's really servicing your needs or understands the amount of risk you don't want to take, Why don't you log on right now to TonyWalkerFinancial.com, TonyWalkerFinancial.com. Click on that Let's Get Started, or of course call the toll-free number on your screen. Well, when we come back with our next Tony in the Trenches, this one's going to surprise you because every week we analyze traffic on our website, and when we come back, the one thing people click on the most, I'll wait, right, Trey? Let's hold them in suspense. You're watching The Worry-Free Retirement. I'm Tony Walker. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. Derek, I know you don't have that new cover in there. If you could get that done. Oh, by the way, how's the old Subaru? Whatever happened to that
old
one? Yeah, the old one.
I lent it to a buddy who moved into town. Yeah.
Buddy, lent. Where's this story
Yeah,
going?
it took him about 5 days. He had another car with it.
And now where's the old Subaru?
He still has it. It still drives, and he paid what it was worth before.
Full value.
Full value. Yeah.
Oh man, great segue. Oh man, thank you. Great segment into our next Tony in the Trenches. Get back over there to work, Derek. All right. Okay, this is a good one. I'm going to turn it over to my favorite son-in-law, Trey. Trey, what is one of the most common, you check all our analytics. So folks, when you go to these websites and you're clicking around, we do check to see where people like to go. Where's one of the number one places people go?
Yeah, speaking of getting paid, like Derek, the top 5 every week site on our website is how you get paid. And this next question actually came from somebody in Michigan. Said, Tony, I've seen how other advisors charge for planning services. If we meet with you in person, first, will we actually get to meet with you? And what's that going to cost?
Now, wait a minute. Did he say he'd drive to Kentucky? I'm not going to Michigan. So we got to send Derek up there in his new Subaru.
That sounds good.
Yeah, that'd be. Okay, so this is good. Let's go to the graphic here. This is, folks, there's only really one of two ways an advisor can get paid for their services. The problem is many of these advisors don't want you to know how they make money. They almost hide the fees. You may feel like that. You get bombarded with all these statements from advisors, but it doesn't clearly show you how much they make. And we do that. We're full front and center, full disclosure. We'll show exactly how much we make, but we work on a commission and a fee basis. We feel that's best for the consumer. When we sell insurance products, those would be annuities, long-term care, life insurance, Medicare supplements, final expense. Those are insurance products. That's kind of baked into the cake. They pay us a commission, you don't. That's just baked into the cake, okay? You don't have any out-of-pocket cost. We can talk about surrender charges and all that if you have to get out of them, but I'm just saying how we get paid. So the insurance companies pay us a one-time commission. Now what about fees? That gets to be a little different. Fees are charged on assets under management. So let's kind of look at what happens here. Now again, this is just an example of somebody that charges fees, and we do too under our Charles Schwab platform. We charge 0.8%, but a lot of money managers out there charge a lot more. In fact, the average fee is around 1.5%. In fact, there's a great commercial on there. It's really a good commercial, great marketing ploy, and they'll always tag their commercials. Our fees are structured so that we do better when you do better. What they don't share with you is when you do worse, we all still do better. So let's take a look at what happens here. Now I went back to 2008, and we imagine you started with an account of $500,000. Trey, you remember what happened in 08, don't you?
Oh yeah.
The market crashed. Okay, so let's see what happened. So the first year, the market went up a little bit to 522, but since the money manager charged 1.5%, they got almost $8,000. That's a lot of money. Now, next year, the bottom drops. It goes all the way down to 323. People say, how can the market go down that much? Folks, in 2008, 2009, it did. In fact, Trey, yesterday I met with somebody who said, I lost more than that. We started talking about 08. They lost almost everything depending on where it was invested. But here's what's wild. Even though you did worse, We in the money management field still do better. Now, as you're going to see, we don't charge that much, but that person, that firm still made $5,000 and you're down to $323,000. Not good. The next year, the market went up a little bit, but it's still way down. You still only have $405,000. You got this huge headwind of over $6,000 now that they're dragging out of it. Go to the next year, Derek, still only at $459,000. Again, folks, this happened back in 2008 and the subsequent years. They still get around $7,000. You're still not back to break even. They get another $7,000, and finally, your account finally gets back above break even, but they get $8,000. So let's kind of look at what you would have made over that period of time. You worked hard, you saved hard, you had all the skin in the game. You made about $27,000 with absolutely no risk. The advisor in that example charging 1.5% would have made $41,000. So folks, here's what I would advise. If you're sitting there right now and you have no clue what somebody's charging you in the way of fees, maybe you're getting ready to roll over your money to someone. You know, these dinner seminars are hot and heavy as we speak. People are wanting that 401k rolled over to them, folks. There's a lot of money out there floating around, a lot of people retiring. I suggest you go to the website at TonyWalkerFinancial.com. In fact, Trey, take them through that a little bit and explain also that fiduciary phone call they can take advantage of.
Yeah, the easiest thing they can do, go to the website. That Let's Get Started button will allow them to do two things. They can either commit to an in-person appointment, a phone appointment, a full, ready to dive in, get this whole planning thing started. Or if you have questions, instead of waiting on an 800 number for who knows how long, just give us a call. You call our phone number, one of our fiduciaries will be available to answer any questions, or if you want to get some things together and plan the time to talk to us for 10 minutes, we'll set up a fiduciary phone call.
Oh, by the way, I know I brought someone back to your office. You had to make a phone call. Are the phone calls getting a little better? I mean, I know during this pandemic, we were on the line trying to reach some of these big boy companies 40 and 50 minutes. Has it gotten much better?
A little better, but we're still sometimes spending over an hour with clients on phone calls.
That's another thing, folks. If you're sitting there and you're thinking, gosh, I'd like to find out more about my 401k, but I don't even know how to go about calling these custodians and these 1-800 numbers. We also have a free service where we will call with you on the line so we can find out exactly what you have, if the 401k is eligible to be rolled over, and assist you with dealing with these big boys. I know it's a very intimidating process. We make hundreds of these calls a year. So again, log on to TonyWalkerFinancial.com or call the toll-free number on your screen if we can be of help. Okay, I kind of saved the best for last. This deals with the three-prong approach to money: man, money, and God. And we're going to learn a valuable lesson from a 116-year-old wonderful woman. Stay tuned. You're watching the Worry-Free Retirement. I'll be right back. So you've worked 30 or 40 years slaving away at work so you can save away money into your 401k, and now you arrive at the biggest financial decision you're ever going to make: where to invest your 401k plan. Think about it. For all these years, you've had a steady paycheck, compliments from your employer for all of your hard work that you dedicated to them. But now, all of a sudden, you've got to figure out how to replace that paycheck with the money you've been saving. No wonder you're worried about what to do and who to trust with that money, which is why we at Tony Walker Financial are providing a brand new free service called the 10-Minute Fiduciary Phone Call. And here's how simple it is to learn more about our services and our 401k rollover process. First, just log on to TonyWalkerFinancial.com. Once there, click on the Let's Get Started button. You'll be taken to a page. Confidentially, you can fill out your information on the screen and then click below the best way for us to speak together. It could either be myself or one of our other trained fiduciaries. It's that easy. So what are you waiting for? Before you make a rash decision and blindly turn your money over to a complete stranger to invest, consider a name and a firm you can trust: Tony Walker Financial. And, oh, by the way, if you like, you can give us a call to speak to us at any time by phone by simply calling the toll-free number on your screen. I'll look forward to speaking with you soon.
Welcome back, folks, to the Worry-Free Retirement. I'm the favorite son-in-law, Trey Juergens, and Tony, this last Tony in the Trenches question leads us right into my favorite segment of the show. The question, hi Tony, I've watched your show for years, just wondering why you choose to close out every show with what the Bible has to say about money.
Okay, and I may have shared this with you, but in case, it's pretty interesting. So this goes back to right after becoming a Christian in 1991. Several years after that, I started the show Your Money Matters. I'm sitting home with my very practical high school sweetheart and wife at the time, Susan, still is my wife, obviously. But I said, you know what, hon, I'd like to almost tell people about my newfound faith. And she said, what do you got in mind? I said, well, I thought about buying a newspaper ad. She looked at me kind of like, well, what's that going to cost? I said, I don't know. And she said, well, you got that TV show you're doing. Why don't you just say something at the end? Of course, again, practical, save money. You already got a venue. And I said, well, I'll do that. So I just kind of put a Bible verse out there, kind of shared a little bit about my faith. But I tell you, it was weird. It felt so natural. So since that time, you know, since Your Money Matters, now we're into the Worry-Free Retirement, I still do it. I hope people enjoy it, and I hope it's encouraging. And so this, what I'm getting ready to share with you now is going to be really encouraging and kind of build upon our theme of why my faith and why your faith has to be a part of your plans. You see, I believe there's a three-prong approach to money, and I think most advisors really miss this. We have man, money, and God. So the man part is just our human behavior, how we deal with things. That's why I came up with the three personalities of money. I recognize that most people are not investors. They're not speculators. They are more concerned about the return of their money than on it. So we deal only with the saver personality, mind over money, okay? Then the second function is money. You got to understand money, folks. We're all stewards of money, and you got to understand how to manage it properly. So obviously, we're trying to help our fellow savers better manage their money with less risk, less cost, so they can use and enjoy the money. But finally, it's God. Let's face it, folks. In the book, Live Well, Die Broke, I talk about this. You're only going to live so long. You only have so much time to enjoy this money. And it is my firm belief that God has us here not to put us on the guilt trip gospel, not to have us in fear of using this money, but He wants us to use and enjoy this money. Because as they say, let's face it, you can't take it with you. Now, one of the most interesting things that came along was this particular article that focused on a 116-year-old lady by the name of Hester Ford. Now, Miss Ford recently passed away, 116. But look at this article about Miss Ford and look at what she says about her life. I love this part here. It says, it was her faith that kept her moving. It was her faith that kept her moving, even at age 116. So I would encourage you out there. I know many of you are doing fine financially. Everything's going great. But we've been in a tumultuous year as we filmed this thing in April of 2021. Let me remind you, no matter what the circumstances of life might be, no matter what kind of financial situation you're in, maybe remember these words of Hester Ford, who said, it's your faith that's going to keep moving. And I would say amen to that. How about you, Trey? Can I get an amen? All right. Well, folks, we hope you've enjoyed today's program. Guess what we're going to do, though? We've got so many more Tony in the Trenches questions to figure out and lay out for you. We've got, I think, 5 or 6 more, Trey?
Yep.
Okay. So next week, more Tony in the Trenches, more of your questions being answered. But you remember, between now and next week, if all else fails, you be worry-free. Make it a good one.